What's unique about this district that we didn't touch base on is that we view both of these deposits as potentially satellite deposits for supplemental feed to existing infrastructure in the area. There's multiple mills that are under capacity in the area. So that would be huge.
Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We're here at the 2025 Rule Symposium in Boca Raton, and I'm here with John Florek, Emperor Metals. John, thank you for coming on the show.
Yeah, thanks, Steve.
You're welcome. Okay, let's start out. Give us your elevator pitch. Start off with market cap, cash, and debt.
Okay, market cap 29 million Canadian right now.
Okay.
We have basically $1 million in the bank.
Okay, $1 million in the bank, no debt. Okay, and tell us about Emperor Metals.
Emperor Metals, it's a unique story. We're actually in the district of the Southern Abitibi, which is in the Superior Province, one of the most prolific gold mining camps in the world. Over 200 million ounces were produced there. A lot of companies got their start there. So it's one of a few districts globally where that amount of coal come out of the ground. So it's a proven district. And we get two advanced stage projects in it, both straddling or adjacent to the plumbing system that introduced gold into the system. So we're pretty excited about it. We have a large-scale conceptual open pit of all the high-grade gold deposit with over 130,000 meters drilled on it. And then we also have another acquisition that we just acquired in 2025. It's actually, there's 3.3 kilometers of underground development. They have been raised. It was going to go into production, but it became an orphan because the entity was acquired by a bigger, entity. So they ended up basically going out.
Okay.
The entity decided that they didn't have enough ounces, because usually it's a 1 million ounce threshold for some of these companies, and it's under 1 million ounces, but they were ready to go into production at the time. That's the point.
Oh, interesting.
And so it's been underwater for 15 years. So the plan is that we want to basically dewater the mine, and then we want to rehab it, rock bolt it and stuff, and put it back in production. So there's a mining permit in place of 1,000 tons per day. And the grade, they had a 96% recovery on this little mine, and for their bulk samples. So it's really exciting. Average grade is 4.35 grams per ton.
Oh, wow. Okay. All right. Okay, so you're in the Abitibi up in the Quebec, the Greenstone, and about 200 million ounces has come out of there so far. You guys are hoping to add to that?
Yes.
All right. You got 130,000 meters of drilling. Looking to do more. Go ahead and go over the your experience, your team's experience that relates to what you're doing now.
Yeah, perfect. Yeah, we're part of the Metals group of companies.
Mm-hmm.
Chairman of the board is John Williamson. The team has basically effectively raised about $1 billion in the space. John Williamson is what I call a serial entrepreneurial geologist. He's formed like 20 different companies. 75% of them have been successful exits.
Oh, well.
Yeah, he picks up deposits, he expands them, and he sells them to majors. This is his track record. So we've got a really good chairman of the board to guide us. We have a CFO. So they've been in the business for a long time, both of them, 30 plus years. Alex Horsley, he's our, corporate development, investor relations guy. We have exploration manager, John LeBrecq. I work with him at Hemlock Lines. Then we have myself. Who am I? Good question. I'm president and CEO of this company, but I'm also a geologist. So I have 35 years experience in this space. The first 15 years have been in exploration. The subsequent 15 years have been in production, both underground at Hemlock Gold Mines, and most recently I was, chief geologist up at Detroit Lake Gold, and that's what Detroit Lake Gold was, and then we eventually got acquired by Detroit Lake, and then at Eagle. So I worked for all sorts of different companies like BHP, Basildon, Bear, all the majors, as well as.
Okay, what's geologic similarities are there to the past projects and this one here?
Yeah, so what's unique about my experience, I have exploration, I have underground production experience, half a decade there, half a decade in an open pit. So I'm kind of marrying everything together. So one thing that we were doing, it's kind of part of the story, we were building the first foundational models up at Detroit Lake Gold when I was chief geologist up there. And we fed those models through the mill, and we saw a 20% increase in the amount of gold going through the mill with these new models that were created through AI. They're foundational approach of it. They're still working on refining those models up there, as far as I know. And so we're bringing, but that was a big part of the story because soon thereafter, Duquesne Lake took out all of Detroit Lake Gold because it was an operation that wasn't very profitable.
Yeah.
And then it became profitable. But that with those new in-house grade control models that we built, the team and I, we were able to, within 6 months after we started feeding at the mill, Duquesne Lake took all the Detroit Lake Gold, and then an Eagle saw the generational mine, and we probably took out all of Duquesne Lake Gold. So it was a pretty interesting place to work and a very successful team up there. So it was pretty exciting fun. We're bringing the key things, we're bringing that technology to a little junior. So all of our work that we have done with Emperor was we go into overlooked areas, deposits that have been kind of stalemated for a while. We grab the data and we basically process it through AI to get a quick understanding of what the opportunity is. Does it illuminate exploration potential or not? If it illuminates the exploration potential, we acquire that deposit with that property. That's what we did with Duquesne West, and that's what we did with Lac Plante.
Okay, expand on this AI system. What's it looking for? How's it do it? And how are you guys capitalizing on that? Like you're taking these old projects that you think you've been overlooked.
Yeah.
Like what data is it looking at? How is this working?
Yeah, it's pretty unique. Basically, what we're doing at our level is we're grabbing all the databases.
Okay.
And then we have to synthesize it because we have to have it as an input into the program.
Yeah.
So, for instance, it might be 100 different rock types or so, but there isn't 100 different rock types on the property because geologists might want different, some map alterations, some map the protolith, some map metamorphic grade. So you have a whole bunch of different kind of peculiar rock types, and you have to, as a trained geologist, you actually have to synthesize that down to like 10 rock types. So it's basically a database exercise. Yeah, but you have to have trained geologists to do it. And then once you do that, you just basically feed it into the system. And it's very, very simple. You press go, you set it up. You wake up in the morning, it crunches for 10 hours. When you wake up in the morning, you have a model.
You have an answer.
And then, but you can control some of the parameters in it.
Yeah.
And so I can make 5 or 6 different models based on different biases, like the structural experiment. I could plug that into it and then press go. So I could have models that would traditionally take 2 or 3 years to develop. I can do that over a day after it picks up my data.
Wow.
And then when I drill holes in the field, I drill 5 holes. If I want to update, every drill hole is going to change them.
Yeah.
So I could plug that into the system, press go, overnight have a brand new model. So my next drill hole when I'm doing an exploration program could be up to date with the newest and greatest model based on just the past few drill holes.
Why aren't all these companies doing this?
People are in convention.
Yeah.
And people have certain routines.
Yeah.
And it's starting to take hold.
Okay.
But we're one of the few jewelers that are leading the pack.
Yeah. Yeah.
And what's really interesting is Bobby McEwen, he took a 9.9% equity stake. He likes what he sees from his projects.
Yeah.
He has McEwen mining close by.
Yeah. Yeah.
And he recently invited me to his board of directors.
Great.
So last week I was, I'm now on the board of McEwen 8. So that's pretty good. He likes our use of innovation. Rob's big into innovation. He likes our approach and exploration. So yeah, we're pretty excited to be working. Well, I'm excited to be working with Rob and QT as well.
Yeah, that's a big stamp of the approval there. Okay, so you just alluded to it, insider ownership. Rob owns, you said 9.9%. Who else owns your company? Do you have any vested partners? What's available to retail? Yeah. Go into that.
Yeah, well, I'm here. So Rick Will just is a new shareholder.
Yeah.
So he just came in like about a month ago.
Okay.
And so we're a late entry into the event. He likes what we're doing. He likes the projects. Rick, this is an invite only event
Yeah.
as far as I'm aware. So he likes our company.
Yeah.
So he invited us down. Here we are. So he's one of, we have, there's probably about 20%, public float.
Okay.
Rob has 9.9%. Management has about 8.5%. Our option partners have about 5%. Maritime resources. So our second asset, Lac Plante, the undersurface rights are owned by Maritime Resources. They're building the mine in Newfoundland. The open pit guys here. McDonald is he used to be the manager of Rainy Rivers, Cote Lake. These guys are big into open pits. They really like Duquesne West a lot. And so we made a deal. We could have an equity stake in my company. And they're so focused with their open pit in Newfoundland that we'll work this underground gold mine called Lac Plante that was supposed to go into production, but was stalled. So they're a strategic shareholder as well. So yeah, it's a pretty good eclectic mix of people in the company.
Okay. Okay. So about 20% is available to retail. Right?
Yeah, we have like high net worth investors comprise about 40% of it.
Okay. All right.
That's
Okay.
what that was.
Yeah. Basically, what I'm getting at is small market cap company, limited orders only, do not compete with each other for this. You said management owns 8.9% of the company, something like
I
that?
think it was 8.5.
8.5. Okay. And how much do you own?
I own 3 million shares of it.
Okay. And how many shares are outstanding?
139 million shares.
139 million. You guys can do the math on that. You have a vested interest in the
Yes.
share price doing well. All right. Size of the prize. What do I looked at you guys a while ago. You were at 700, and my kindergarten method wasn't quite met, but that's increased a little bit. What?
Yeah, so we have a historical mineral resource of 727,000 ounces of gold with an average grade of 5.42 grams per ton. We just released our maiden mineral resource the other day.
Mhm.
It's now at 1.46 million ounces.
Okay. All right.
So we doubled it.
Yeah.
And we
That's
did
what I'm
that in
getting at.
2 years. Part of the story is when we had this, we picked up Duquesne West, we did not actually, we were viewing it as an underground gold deposit, but we were the first company to sample the entire drill core and the host rock that contained these high-grade lands, which I alluded to. Also contain gold, like 25 meters of 1.69. So we quickly envisioned a large-scale open pit above this high-grade gold deposit. And so, yeah, check out our maiden mineral resource. We doubled it. Looks exciting. We broke the 1,000,000-ounce barrier. So maybe institutions and majors will start paying attention to this story. So we're pretty excited about the threshold barriers that we just happened. So I think it's a great buy at $29 million market cap because our analogs projects of this scale and size, they're trending between $50 to $400 million market cap.
Yeah. Okay. All right. So you could see that doubling. And as far as maybe just expand a little bit, how do Duquesne West? What? How?
That's how you spell it in English. It's Duquesne.
Okay.
But it's Duquesne.
Duquesne. Okay.
Like a French flag.
Yeah.
It's in Quebec, right? So,
Okay.
yeah. So yeah, Duquesne West. It has we're trying to build it out to about 5 million ounces from a kilometer surface. That's the target.
Okay.
Going for.
Okay. Duquesne and then
Lac Pelletier
Lac Plante.
is 227,000 ounces. We modeled it through AI. We saw the potential that we could double it quite quickly. Like I said, there's a mining permit in place of 1,000 tons per day. With the grade we have there, we could mine 40,000 ounces a year at $2,500 gold. That's $100 million. So that's pretty good.
Yeah.
And what's unique about this district that we didn't touch base on is that we view both of these deposits as potentially satellite deposits for supplemental feed to existing infrastructure in the area. There's multiple mills that are under capacity in the area. So that would be huge. We wouldn't have to build a mill.
Yeah.
We wouldn't have to build a tailings dam. That saves us like $500 million in CapEx costs.
Yeah.
So what that was our corporate strategy. We would get our start in a district like this because a lot of companies, when it goes into development, CapEx costs will blow out the water.
Yeah.
So we're finding that overlooked deposits, gold prices going up. Went up quite a bit from 1,100. Now we're 3,300. We're picking up these opportunities. Timing is everything in this industry. I think we got it right.
Yeah. You might have lucked out on timing there. Okay. So the prize, we talked about AI. Principal risks. What could go wrong?
What could go wrong?
Mm-hmm.
That's a good question. I guess the biggest challenge for us has been, raising the capital in a really, really bad market.
Mm-hmm.
But we worked extremely hard. Alex Horsley is a great investor, outreach person. So we've been pounding the pavement in this bad market. We were able to assemble. There's been some adversity, yes. There's some sleepless nights, but we're able to get the money in the door because a lot of people see the quality of this investment. So yeah, there is obviously capital raising is probably the biggest hurdle.
Okay.
But now we're ready to, with our maiden mineral resource, we're ready to, expand upon a more significant drilling program. And so that's what keeps us up at night. That's the risk for the company is sometimes a lack of capital in this market. But I think turning into a bull cycle here, that's what this conference is all about. That's sort of what the main theme is. Then all the talk that we're moving into, a cyclical bull, right?
Yeah.
So we're
Okay.
pretty excited about that.
Okay. Catalysts. What are some upcoming catalysts? What could boost this in the next 6 to 12 months?
Yeah. So we want to start our 2025 drilling program in 2025 here. I guess we have budgets at 8 to 10,000 meters, but if we can get more money, I think we want to raise about $5 million initially, see how that goes, and probably top that up and keep expanding this deposit. Probably when we push this over the 2 million ounce threshold to Duquesne West, we'll probably start thinking about another MMRE and a pre-feasibility study. We're unique amongst all the other juniors in the fact that we actually have near-term cash flow with that deposit to the south called Lac Plante. Very, very excited. Has a mining permit for us, right? So all we have to do is dewater it, rehab it. We have to get probably just about update the environmental authorizations, and then we can start mining. So we're pretty excited.
Okay. All right. And what is the biggest unanswered question facing Enbro Metals today?
The biggest unanswered question:
Yeah. And what's it going to cost to answer that question?
do we have a tier 1 depositor now?
Okay.
Okay, so that's 5 million ounces. So we think we have the vision for it. And we're using the latest and greatest technology. We already doubled the resource with all we drilled was additional 16,000 meters of our drill on top of that, 105,000 meters. And then we sampled all this historical core, put that into the model, and we still have more historical core. This is gold that was not encountered for that could be involved in the open pit. We want to lower the stripping ratios, make the pit more economic. We could add ounces more rapidly in the open pit environment because you can mine a lot lower grade than in an underground. So with a combination of adding underground, high grade underground ounces, as well as low grade bulk tonnage in an open pit scenario, we see a clear path for a tier 1 deposit. But that's an unanswered question. Will we get to 3 to 5? But then keep in mind, these deposits have better depth extents than they do horizontally. So even though we're down a kilometer, the mineralization goes that far, it probably goes to it. Some mines just lateral trails are mining at 3 kilometers down. This district has a history of deep mining.
Yeah.
Because these deposits go deep. So we could 2x it. So a lot of these companies in the district, they started off at 1 million ounces. When they closed the door, they were 10 million ounces. Some deposits in this district produced 20 frames. Pretty impressive.
Okay.
So that's the unanswered question. Will we be the next tier 1 deposit?
Okay. Anything I should have asked that I didn't? Any closing thoughts?
No, you can look at OTC is EMAUF. If you're on the Canadian markets, it's AUOZ, gold ounces. So that's our ticker symbol. Look us up. Do your research. We're pretty excited about it. And we've got a lot of buy-in in here on the last couple of days. People here at the show are really enthused with their seeds. So, especially with our MMRE, that was just
Yeah. Okay.
so we popped.
Awesome. John,
Thanks,
thank you for
Steve.
coming on
Yeah.
the show. And thank you for tuning in. Go to stevebartonmoney.com for more and have a wonderful